All right, guys, back to work. Hope you guys made some money out there today. Boy, markets are pulling back right now into that perfect spot for a bear trap we talked about in last night's video. But there's one new clue, one new piece of information we saw today that tells me tomorrow we might get lucky tomorrow. We might get one of my favorite trades tomorrow, what I call a slingshot reversal. In these situations, I always look for slingshots. In the video tonight, we'll talk about what a slingshot reversal is, how to trade it, along with all the other trades I'm tracking for Wednesday. By the time we're done tonight, you'll have an easy roadmap to make some money tomorrow morning. Now, before we jump in and talk about my favorite trades for tomorrow, including that slingshot reversal, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, though. Let's go find that slingshot reversal and, of course, a lot of other trades we're tracking for tomorrow. Charts are all ready to go. As you can see, Nasdaq is ready. Nasdaq triple Qs are ready. The S&P and the SPY is ready. I have three big clues, pretty easy clues right now on these charts that are tipping us off to where the best winning trades are going to be for tomorrow. One of those clues is right here on the 60-minute time frames in front of us. We have a bullish market overall with a big move after the FOMC last week. And as we mentioned last night, we know this market right now is slowly pulling back into key areas of resistance as buyers try to buy the dip and make that run back up to retest the high. So bottom line is, one of the most important clues, one of three clues that tell us what the best winning trades are tomorrow is overall bull market, lazy bear trend. And we know right now we're probably pulling back nice and low to allow buyers to buy nice and low and then run back up to retest those highs. Now again, that's one of three important clues. I think there are two even more important clues on the tick charts tonight. But before we dive into that, though, and talk about entry tactics and the tick charts, and of course that slingshot reversal I mentioned earlier, let's double check our schedule for tomorrow because there's a couple things you want to be aware of. First of all, you'll notice there's no major news for us E-mini traders, Nasdaq, triple Qs, S&P, SPY. There's no real big catalyst on the schedule for tomorrow. What you do want to be aware of, though, is tomorrow, Wednesday and Thursday are pretty much the last two trading days of the week, the last two trading days of the month, and this is the end of the first quarter, the last couple trading days of the first quarter. Now remember, Friday is Good Friday, the Friday before Easter weekend. So markets are completely closed on Friday, and of course we have that big personal income number, arguably the biggest news of the week. The markets are going to be closed up tight on us on Friday morning. Usually that means the next couple days are going to see an uptick in volatility. So don't be surprised when we go into end of month, end of the quarter, we always expect to get some more volatility. And with that personal income number, another data point we assume the Fed is watching as they try to figure out when they're going to cut rates here this year. We know that will probably increase the volatility a few more notches as well. So no major news on the schedule for tomorrow, but again, next couple days here, be aware of that increased volatility because Friday is locked up on us and that big news report, a lot of scarcity as we finish up the week, the month, and the quarter. So be aware of that next couple days. Now, back to our charts. The money is made on the charts. Let's now go over my favorite trades here for tomorrow. We'll begin tonight on the S&P and the SPY, and we'll finish up tonight on the Nasdaq and the triple Qs. I mentioned earlier this one important clue, a nice bull market, a slow, lazy pullback into areas of support and a retest of that high. Bullish direction right now on the 60-minute time frame tells us the best directional filter, the best odds of success are the long side right now. But now let's go over to our tick charts. This is a 7,000 tick chart linked up there in the upper left-hand corner. We do not trade time charts in our trade room. Tick charts make everything easier, especially pattern recognition. And if you're watching for the first time right now, this is the 21 EMA. It's pretty much the only indicator you need to come out and find lots of winning trades with us every morning in our members trade room. Now, there are two more clues right now on this tick chart. One of them is this big range right in the middle. It's actually a kind of a cluster of previous ranges. We got range here, so multiple ranges on the charts right in the middle. Now, if you guys are going through my free video classes right now, you know that ranges act like magnets. So think about this. We're an overall bull market, big magnet back in the middle. I'd love to get, as I mentioned earlier, we're now down in that area for some nice bear traps going back up into that trading range. But there's one more clue, and this is the big wrinkle we have, the big clue we have that we didn't have earlier on today. We now have a strong move down. That strong move down is significant. Why is that important? Well, because anytime we see a strong move down like this, we have to expect that all of that bearish momentum is going to want to pull back and retest that low before they allow us to really make that move going higher. Now, if we play our cards right with this, again, we're an overall bull market. If we play our cards right on this, we can buy the initial move higher, and we can buy that double bottom. Now, of course, there are a lot of variations of this we'll talk about tonight. Make sure you guys have a game plan to make money no matter what the market throws at us. But I love the idea of some bear traps right here, double bottom reversals, and we'll talk about, of course, later on in the video, if we're lucky, we'll get that slingshot reversal. This one very specific type of situation tomorrow we need to line up for us to get my favorite setup, that slingshot reversal. We'll talk about that, of course, in a moment here as we go deeper into the video right now. If I want to be a buyer right now, I don't have any short-term momentum to help me with this. So for me to get a winner off of this low right now, I need to use what's called a bear trap. Bear traps are very, very simple. It's bears trying once to go lower. It's bears trying twice to go lower. Notice that higher high in price. I move right below that low, a nice strong green candle. We talk about this, of course, in the free video classes, and a run back higher. If you look left over there, there's a bear trap pattern right there. We go down, the bears try to go once, we go lower twice, and of course buyers come in right and buy off of that low. Bear traps are everywhere in an overall bull market that is leaning towards the downside like we are right now. That's one of my favorite trades here for tomorrow. I want to buy as low as I possibly can, and again, because we have that bearish momentum going against us, I want to trap those bears in and use their stops, right, to fuel that move going higher, right? Makes sense? Okay, now, a lot of times what happens is we're going to get that bear trap, but then we'll get all that momentum to roll over. So what happens a lot of times is we'll get that bear trap here, we'll run back up, and we'll end up holding off the underbelly of that trading range, right? We'll get our one-to-one target, right? We'll get a winner off that trade, but again, because of all that momentum, the market loves to run back down and retest that low. Now, I would love to get that same bear trap pattern. It's not required though. I can easily use what I would call a two-try failure, right? So bears once, bears twice. Now again, I would love to go underneath that low, right, for a bear trap pattern like I've illustrated over there, right? But again, not required. As long as I've got those bears trying twice, again, I can use those stops to fuel that move running higher. Now, watch closely here, because oftentimes when I get that double bottom reversal like that, again, overall bull market at support underneath a big trading range. Oftentimes, if I can get that double bottom, the price will roll higher here. And where do you think the market wants to go? It wants to go back and take out that high. On the way to that high now, this is where we definitely want to look for another one of those bear trap patterns. It's a higher high in price and a move right below that prior low, right? Think about that bear trap pattern as we're going higher. So notice the key differences in these setups. It's a bear trap pattern, or if you're a student of mine, we call these crown reversal patterns, that one try, two try, that bear trap below that low. Again, look to take some profit off at the underbelly of that trading range. It may keep going, and we may get lucky on this. We'll talk about that more here in a moment. But again, anticipate now they'll sort of run this thing back down to retest that low. Now think about it. Anybody who sold short up there, where are they taking their profit? Back down around these lows. This is an area where if we get that 1-2 failure, everyone becomes a buyer, right? Everyone's a buyer at that point because buyers are going to buy low. And of course, sellers are trapped in when they get stopped out, right? They have to buy their way out. And anyone who sold short on that breakout pullback, they're taking their profit at that low. A scenario where everyone becomes a buyer. And then don't forget, as it rolls higher, look for that bear trap pattern, that higher high in price, and that trap running higher as well. Now, let's talk about one more variation of this. And then again, we'll talk about that slingshot reversal I mentioned in a moment. We may not get that double bottom, right? Again, bunch of ranges here. We are now starting to get into some key support levels here on the 60-minute. If this thing was to V bottom off of this low, if it was to V bottom and just rip and run higher, keep an eye out for this pattern. It'll V bottom and begin to grind on the way higher, right? When it grinds going higher, what that basically tells you is the opposite side of the market is basically walking away and the price begins to float higher. The hardest part about these V bottom reversals, though, is that once the price begins to flutter higher, it's very tempting to jump in and get long up here. But remember, the reason why it flutters higher is because sellers are walking away. Eventually, buyers are going to want to get back in, and when they do, they're going to want to buy nice and low. So it's worth waiting patiently. I'm going to draw a trend line off those highs, find that channel, and we talk about this a lot in the free video classes, right? Look left, find some prior swing lows, and I want that first test off the low of that channel. Now, it could be a bear trap pattern underneath a prior swing, like I'm showing you right here. Oftentimes, we'll get underneath the 21 EMA. That is where failure patterns live. Failures turn into pullback combinations. Failures turn into bear trap combinations. You guys are learning all this stuff, right, inside of the free trading course. So keep in mind, if we do, and again, we might get a 1-2 bear trap back up into that, but if we begin to start grinding higher, think about that new channel and grab whichever one of the entry patterns I can find. Traps, failures, pullback combinations, or bear traps. Now, let's slow down for a second because I know that most of you guys watching right now, you've taken my free video classes, you've learned how to trade traps and failures, pullback combinations, lots of bear traps in the free video class. But if you're watching for the first time right now, this might be a brand new language for you. Don't you worry though. I teach all of these entry patterns. I have hundreds of examples of traps and failures, V bottoms, crown reversals, all taught, all included in our free video classes. I'll put a link up top here for you. Don't you worry, I got you covered. I'll put a link up top there. Hit that link that popped up there and take that free trading course because the strategy I teach in that video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, traps, failures, all my favorite setups. They're all covered in a lot more detail in that free video course. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Perfect for someone trying to make the jump into full-time trading. And also, too, if you can't get a link up top there, I'll put all the important links in the description of the YouTube video, the free class links to learn the strategy. We trade together every morning, 8 o'clock Eastern time in our trade room. I'll put trade room information in the description. And also, too, I'm on Twitter. I post a lot of Twitter updates throughout the day. If you're on Twitter, give me a follow. All the details in the description of the YouTube video. So now we know if it's going to V bottoms right off of that low here, we know to go out and look for that pop up and that grind going higher and find that channel and buy the first test off the low of that channel. Now, this every once in a while, and again, tomorrow, we turn the corner into the end of the month, end of the quarter, right, end of the week, because Friday, of course, is a holiday. You know, there's always a possibility we get that big V bottom and we jump right off of that low. If it rips right back higher, I do not want to buy high. I want to buy nice and low. The hard part will be on this one, not chasing after it. If we do rip higher, I'm going to look for what we call a two-legged pullback. What's a two-legged pullback? A two-legged pullback, we talk about measured moves inside of the free video course, right? So think about a measured move. One leg, two-leg. A two-legged pullback will be a little bit more than a measured move. That will give us a general area of where to look for the entry. Now, you know me, right? I don't like to pick tops and bottoms, right? I don't know how far that pullback will go. What I do know, though, is if I have a strong run going higher in an overall bull market, if I get a strong 1, 2, or so I get a deep two-legged pullback, a bit more than a measured move, I can now go in and trap the bears in underneath that 21 EMA. Use one of those two-try failure patterns we talk about a lot in the free video course. Trap them in and run those stops. That failure into pullback combination, that failure into a bear trap combination we talked about so much already on this video right now. But again, that will be the game plan if for some wild reason, which should not be that surprising because again, we're going to the end of the month, end of the quarter. If this thing simply rips higher, doesn't pop up, right? If it pops and grinds, we know the right way to do it. But if it V-bottoms and just spikes up going higher, I don't want to chase after it. Buy nice and low, find that two-legged pullback. That will give you the general area. And again, we're not going to blindly buy that two-legged pullback. We'll trap in the rookie bears below that 21 EMA, use that two-try failure pattern to run the stops, and then again, look for that bear trap entry or pullback entry as we go back up and take out some areas up overhead. All right, guys? But now let's talk about that slingshot reversal, right? Because if we're lucky tomorrow, if the trading gods are washing down on us tomorrow, we'll get the right conditions to get that slingshot reversal. Let's go to the Nasdaq now. The Nasdaq is ripe for a potential slingshot reversal. And again, I know a lot of folks right now are wondering, is this still a bull market? This is definitely still a bull market. A very big move up off the FOMC. It makes perfect sense, of course, for the market right now to be pulling back and pulling back and pulling back into key areas of support. And you know the market wants to go back up and retest the high because, again, anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that level. We mentioned that before with that big move down on the S&P. But again, the 60-minute time frame is great for the overall direction, right? We're not going to trade off the 60-minute time frame in our trade room. We'll trade off some tick charts. This, of course, is a 4,000 tick chart and the same 21 EMA on this chart in front of us. And just like on the S&P right now, we have an overall bull market. We got a bunch of ranges up overhead. Again, those ranges act like magnets. We're down around key areas of support. And again, like on the S&P, a very strong run going lower. Why is that strong run so important? Because whenever we see a strong move in one direction, we expect to pull back and a retest of that level. We also have that strong run from yesterday that is trying to retest as well. So the Nasdaq is very much like the S&P in the sense that if I want to be a buyer here, I don't have any momentum in the short term. Again, we're still bullish overall, but we have a short-term bearish control right now, which is exactly where we look for those bear traps to get in long. Because again, I don't have momentum to help me right now. I need to run stops. Again, bears once, bears twice. I need that bear trap to fuel that move going higher. And hopefully it makes it easy on us and runs all the way back up to those highs overhead. But I wouldn't hold your breath on it, right? I would be prepared to pull back, hold the underbelly of that range, try to make that run back down to retest the low. And if they do, don't forget, this is that double bottom reversal pattern, that 1, that 2. We call these two-try failures in the free video classes. That failure into that bear trap pattern we mentioned earlier, right, on the S&P. So same basic idea on the Nasdaq. And again, if it V-bottoms, it's a pop and grind going up, right? Or if it really rips and runs higher, which doesn't seem as likely, but hey, my job tonight is to prepare us for everything the market throws at us. If it really rips off that low, then we've got that two-legged pullback, right? And buy that two-legged pullback and continue that run going higher. Now, let's talk about slingshot reversal. You probably have noticed over the past couple days, it seems like every day has been very choppy, and a lot of that is because of the time of year it is. It's the end of the month of March. It is notorious for being one of the choppier times of the the year because of the end of the first quarter. I won't go into more detail on that. We talk a lot about that in our trade room, but just be aware, end of the month of March, last few weeks of the first quarter are notorious for being relatively choppy. So we do want to anticipate a potential range as we go lower. Now, we talk a lot about range markets in our free video classes, so hopefully you guys are somewhat up to speed on that. If you're not familiar with how ranges work, again, hit the link up top there in the upper right-hand corner or down in the description. Make sure you take that free video class because you'll learn a lot of things you don't know already about ranges. Now, the most important thing about ranges is they act like magnets and they love to rotate. So when I think of a slingshot reversal, what I'm talking about here is this type of situation. I would love to get a range overnight and then make a strong jump going lower. Okay. Now think about this. It's an overall bull market. We're now running into major levels of support on this tick chart and on that 60-minute time frame. Okay. Now, is this a good place to sell short? No, right? The correct answer is no, right? It is not a good idea to sell nice and low. I don't care how strong that momentum is. Now, at this point, markets love to bear trap underneath that low and slingshot back up and basically resume that overall bullish trend. And if you understand the way ranges work, ranges love to pendulum swing, right? They love to swing. They love to take the amount above a trading range and project down below that trading range. They love to pendulum swing. This is the thesis or the fuel that makes that market slingshot reversal. So think about this, right? If we see the market now go sideways, and again, this will also apply to the S&P as well, but if we go sideways overnight here, if we end up going lower here, I love the idea. Same basic idea, right? Same basic idea. I'm not going to blindly buy down here. When we're so bearish, I need to get that 1, 2, right? I need those stops to fuel that move going higher, right? But now pay attention though now. So now, if I can get a bear trap down here, either a technical bear trap or a 2-try failure pattern, you'll learn the difference of those inside the free video classes. If I can get those bears trapped here and get that failure, and remember, where does the market want to go? It's going to want a slingshot or pendulum swing. I call these slingshots because oftentimes when we get a bear trap down here and we're overall bullish, right? That's the key. We're not a bear market. We're an overall bull market. These will slingshot and rip. And sometimes this is the exact bottom of the entire pullback on that 60-minute time frame. So think about this, right? We know where the market wants to go now. And as it makes its way higher here, what do? We go out and look for those 2-try failures. We look for those bear trap entries, and if we're lucky on this, it will spike up, it'll break through that pendulum swing, and we can now look for that breakout pullback off of that trading range. This is the sequence I look for when I think about a slingshot reversal. This is the sequence I think about. It begins with a bear trap below that trading range. And again, this could be a 2-try failure pattern, or it could be a technical bear trap. That will make a lot more sense in the free video course. Then I definitely need a bear trap as we're rotating off of that low. Remember, ranges love to rotate. Amount below, the amount above. That rotation tells us where we place our targets. Okay, makes sense? Leave that runner. If you want to make more money, get better at letting your trades run. Don't trade more often to make more money. Just get better at holding on to your winners. That comes with experience. I'll walk you through it with you in the trade room tomorrow morning. And then again, if we can get a nice clear, kind of conviction break above that pendulum swing, then we look for that breakout pullback. Right? Let's talk about that breakout pullback here for now, because that definitely is something that you want to be aware of. Let's say, of course, again, we get that slingshot off the low. I won't go back and repeat it once again here. But if we can get that slingshot, right? Get that slingshot breaking out and really kind of cooking, right? Through that pendulum swing area, right? Makes sense? A convincing breakthrough that pendulum swing. What will happen is the moving average now will come up like that. I'm not going to buy the pullback off the moving average. What I do is I want to get back around those previous highs of that trading range. Range breakouts love to break out pullback. And to do that, this will almost always put us progress underneath the 21 EMA, now we have a strong run up in an overall bull market. That strong move is unfinished business, right? Remember, strong moves love to retest, right? So if we see a strong run going higher, it's unfinished business. All we do now is trap those bears once, twice. We don't pick the bottom. Right? Remember, we don't have a crystal ball. We don't know. This may end up rolling all the way back down again. And we'll talk about a short on that in a second here. Don't you worry. But if I start seeing the bears once, twice, now I got you trapped, right? Now you can't leave, right? Now your stops are there, and I can now take out that stop loss, right? Run those stops for a next leg going higher. And again, a lot of times it'll be a failure pattern like this up into a bear trap pattern as we go higher. And as we always mention, right, whenever we have a breakout of a trading range, the size of that breakout leg is the size of the target, right, on the opposite side of that move, right? Makes sense? So again, think about this song and dance. Think about this little dance here, right? That bear trap off the low, right? That slingshot runs higher. And if we can get a nice strong push through, grab that breakout pullback off the top of that trading range. I'm getting kind of excited just thinking about this right now, because I'll tell you, these scenarios are very common when we have a big bull market up, a deep, sloppy pullback going lower. We get these little tiny ranges down here, right? And all of a sudden we bear trap and bam, that's oftentimes the low of that move. It's all because of that little range right there and that bear trap right below it. Now, one thing you do want to keep in mind is that, again, ranges love to rotate. If we rotate lower and rotate higher, this will be an area of resistance. So don't chase after it up there. How would I sell short up there? I'd have to look for one of those crown reversal patterns, right? Because this would not be a good long right there, would it? Not if we haven't broken convincingly through that pendulum swing. Now, if it keeps going, right, grinds up, that could be a pop and grind channel, right? We mentioned earlier in the video, a lot of ways in which we can do this if we can convincingly break above that pendulum swing. But if we don't, and I see buyers once, buyers twice, rookie buyers here, there's that crown reversal pattern. A lot of examples of these inside the free video classes. It's buyers once, it's buyers twice, it's a lower low in price, and a bull trap off that high. So keep an eye on that setup if we can't get that convincing break above that pendulum swing. But I'll tell you right now, that slingshot reversal, we may look back on this 24 hours from now and say that was the actual bottom of that market for tomorrow. So that is the game plan for tomorrow, Wednesday morning. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come out and trade it with me. The easiest way to start making consistent money in the markets is to learn and trade along every morning, 8 o'clock Eastern time in our trade room. I'll put all the important links, the free class links, the membership trade room links, all the Twitter feed stuff. Everything will be down in the description of the YouTube video. Any questions, comments, concerns, you can always call the office, use live chat. I'm always here to help out every step of the process. Guys, hope you learned a bunch in the video tonight. Hope you use this knowledge, use this strategy to crush it and make some money tomorrow. In the meantime, be well, be nice to each other, will ya? And hopefully I'll see you sometime trading along with me in the morning trade room. Adios, amigos. Bye-bye for now.